Governments have actively disincentivized people to invest in properties. You can't make the easy money that you once could.
People only want to buy in hot markets and they don't want to buy when the market's down. And so it's very easy to get sucked into bidding wars and overpay. And the great thing is, when no one else is interested, you can go in there and get good deals.
Money is more expensive. Interest rates are higher. In the context of, policy changes, the Renters' Rights Act, is buy-to-let dead? Welcome to Investing Unlocked, making money make sense, with me, Georgie Frost.
And me, Simon Lambert.
And joining us today is Rob Dix, property investor, co-founder of The Property Hub and author of a number of books, including The Complete Guide to Property Investment and his most recent 7 Myths About Money. But first, Simon, a question we get asked a lot and that we talk about a lot. Is buy-to-let dead?
No, buy-to-let isn't dead, but it's a very different prospect to what it once was.
Mm-hmm.
When I started out as a financial journalist 20 years ago, buy-to-let was absolutely booming. It was peak buy-to-let, or pretty much peak buy-to-let. And there were, people encouraging people to buy a house in a town up north and put the deposit on their credit card, get a mortgage, rent it out, make some money.
Yeah.
And there was people buying off-plan flats. It was all going on. That has shifted dramatically, and one of the things has been high house prices makes it much harder.
Mm-hmm.
The barrier to entry is harder. The tax burden is much greater. The successive governments have actively disincentivized people to invest in property through the tax system. And also we've seen stratospheric house price gains, and so there's just not the money to be made anymore. But I think that for people who do want to invest in buy-to-let and do it the right way, it's still an option, and it's still potentially a good option, but you can't make the easy money that you once could. And when someone tells you about the amount of money they made, you need to be asking them when exactly they made it.
Yeah. We'll find out exactly how much money you can make. We'll speak to our guest. Rob, welcome. Before we get into that, though, what is it? I said right at the start, we don't just like property. We love property. An English man or woman's home is their castle. There is something, emotional about property for us as a country, buying particularly. Why is that?
It's one of those cultural things, isn't it? It just feels like it is so much part of the culture. You grow up with it, especially if your parents have been through previous booms or cycles, so they believe it's a great thing. They tell you it's a great thing, and it's just with you all the time. And I think because the state of financial education in this country isn't great, maybe property feels like something people feel like they understand. It seems like it's even though it's a lot of work, it feels less intimidating than something like the stock market. So I think there's lots of factors, but you're right. And it's like if you don't own your home by a certain age, you feel like a failure. I don't think it's healthy, the over-reliance that we do have.
I want to ask, because we will focus a lot on obviously buy-to-let, but it's not the only way to invest in property. So let's get that out first of all. When we're talking about in property investing, what are the main ways, the routes to entry?
So I think there's a distinction to be made between investing in property and using property as a business, as a trade. So if you are flipping property, so like the old property ladder type stuff, and so you're buying a property, doing it up, is that investing in property? Kind of, but you're not holding on to it. So is it really an investment, or do you just have a job that's refurbishing properties? Same for if you've got a holiday let, like an Airbnb. Yes, it's an investment in property in a way, but it's also an active business. So I'm a bit of a purist. When I talk about investing in property, I really do mean buy-to-let. Although, of course, if you own your own home, that is an investment in property, but again, a very different type.
But Simon, there is ways that you obviously can invest in parts of property within a portfolio, for example.
By which do you mean sort of investing in property funds?
Exactly right.
Yeah, and often people can confuse the two, but investment in property funds tends to be in commercial property. So, offices, warehouses, shops, retail, and you will find funds that hold properties directly. So they will actually invest into those properties. And you will find funds that invest in the shares of property companies. Now, people need to be careful. in the way that they do this, because if you invest through what's known as an open-ended fund,
Mm-hmm.
so that is essentially what we call investment funds. Now, those will, as more money comes in, they have to buy more assets, and as money goes out, they have to sell assets, and they
Yeah.
will always tend to reflect the amount of money that's in there. And so you can find scenarios where if people suddenly rush for the exit, then they can't sell properties quickly enough in order to fund those redemptions. And what happens is something called gating. So people get locked into the property funds because property is an illiquid asset.
Mm-hmm.
If you've got shares that
Hard
are
to
traded on
sell,
the stock
basically.
market, yeah, you can sell shares traded on the stock
Mm.
market pretty much immediately, depending on what kind of company it is. A big company, you can sell those shares immediately, even in large amounts. A small company, it's a bit harder. But properties, it's quite difficult to sell an office block. It takes a long time to sell an office block. So open-ended funds are not considered a great way to invest in directly into property. Investment trusts are another way of doing it. Now they are actually listed on the stock market themselves, so they don't become forced sellers or forced buyers in the same way. But most of the opportunities to invest in property that you get in that sense,
Mm.
it is commercial property. It's not residential property. There are a few that have done residential property in the past, but it's never really taken off.
Is it a popular thing to do? Has it got a place in everybody's portfolio, or is this
I'm
more a specialist thing?
holding some property in your portfolio, by which I mean, traditional
Mm.
property investments, is not necessarily a bad thing. You're diversifying away from the stock market. You're diversifying away from the bond market as well. But it comes with its own risks, and some of those risks can be exacerbated by what is going on in the outside world. And over the past 20 years, the property market has been through the ringer due to stuff that's going on in the outside world. We had the financial crisis,
Yeah.
which was born of bank lending, so led to an absolute crash in bank lending, which is obviously bad news
Mm.
for people investing in funds, investing in property, commercial property. And as a bit of background, both of my parents actually work in the property industry or worked in the property industry. My dad worked in commercial property. That was his job. That was what he did. He invested in commercial property for a company. My mum is a letting agent and runs her own business and has run her own business for the past 30 odd years, basically.
We should have had her as
Yeah.
well. Come
Yeah,
in.
exactly. And she still does now,
Yeah.
right? So she manages properties for individual landlords. And a lot of these are long-term landlords.
Mm-hmm.
Some of them are people who own the properties, move overseas. Some of them own them as an investment. And I've seen it, like at the coalface over the years. And to go back to my point, post financial crisis, my dad was still working at the time, and I saw what was going on then. Like, there people went, whoa. He was saying
Yeah.
this is a great time to buy, but nobody wanted to buy it. So you had that. Then you had obviously the years after that. You had COVID. You had the lockdowns. You had interest rates on the floor.
Mm-hmm.
You then had interest rates suddenly spiking. So that commercial property market has been through the ringer. So it's quite difficult to look back at it and say, is it a suitable investment for people? Because, over the last 20
Yeah.
years, it's been a bit tough.
Well, okay, so that's commercial property. Rob, let's focus on the sort of property that you've been investing in.
Mhm.
When did you get started?
It was round about. It was actually just after the crash that I got
Mhm.
started. So it's probably
Interesting time.
which is probably the best time to get started, right? Because I managed to, through luck, miss out on all that craziness. So when I was getting started, everyone was still sort of talking about those things in the sense of like, oh, it's so annoying that we can't do them anymore. But obviously that played a part in bringing about the crash. So I got started in the depths of it, which was great because it meant that no one else was particularly interested.
So was property cheap? Money was cheap? Is that what was the environment?
Relatively, yeah. So a lack of competition is a great thing in property. The funny thing about property is kind of like you alluded to, people only want to buy in hot markets and they don't want to buy when the market's down. And so it's very easy to get sucked into bidding wars and overpay. And the great thing is when no one else is interested, you can go in there and get good deals. And so that's why people think they want the property market to always be going up. But unless you've already bought everything that you're going to buy, you actually don't want that at all.
So would you agree with that kind of sentiment that often gets mentioned of you make the money when you buy, not when
Yeah.
you sell?
Yeah, you make your money by buying well and then holding for a long time. If you do those things and you don't manage to mess things up along the way, it's quite hard to go wrong. Just the sheer mechanics of it. But if you are buying in an overheated market, which is always really obvious in retrospect, but not so easy at the time. But if you buy it in a hot market, you overpay. If you over leverage, if you get sucked in to try and make money quickly, that's how you can go wrong. But making money from property over the long term is spectacularly easy to do if you just stick with it.
Did you go into it thinking, yep, this is going to be my job?
No.
I'm going to write a book. I'm going to do a podcast. No, but was it one of those things where maybe you became an accidental landlord, or you thought, maybe I'll just do one on the side? What was the initial entry point?
The same as everyone we were talking about earlier. I had a bit of money. I thought, what do you do when you've got some money to invest? Property. And it was my thought process did not go any further than that. But then it was I'm a bit of a researcher, so in the process of making that purchase, learning all the things you need to learn, I just got really into it, and that obsession never fully left me. And then that was a gateway into investing more generally, into economics and all that kind of thing. But it all started with just that, property is the default.
Before we carry on, a quick word from our sponsor, PensionBee. If you're listening to this podcast, chances are you care a fair bit about investing and making the most of your money. But here's the thing, you don't have to be a pensioner to care about your pension. In fact, the earlier you pay attention, the more powerful it can be. Your pension is likely to be one of, if not the biggest investments you have, yet it's often the one people ignore the longest. That's where PensionBee comes in. They're a leading online pension provider focused on helping people build confidence and take real control of their retirement savings at any stage of life. Their app and website make it easy to combine old pension pots, manage contributions flexibly, and see exactly what's happening with your money all in one place. You can also access your pension from age 55, rising to 57 from 2028. If you want to take a more active role in your pension investing, download the PensionBee app or visit their website to get started. Remember, when investing, your capital is at risk. I don't know if this is a pointless question to ask you, given the fact that you've just spent the last 20 years doing this, so you're obviously quite emotionally invested in it. But I wonder if you had the same issue now. I've got a bit of money, what would I do with it? Because I'm not sure my immediate reaction would be, I'm going to invest in property. In fact, that would probably be, for me, the last thing. And look, I'll be honest with you now, Rob. I've read your book. It's very good. But I don't know if it's just because I read it, at a certain time in my life where I thought, I am too lazy to do anything in this book, right? I am happy just to stick my money somewhere, let's say in a global tracker, just leave it. The idea of doing some of the things here, especially the flipping and all that sort of jazz, it sounds like a lot of effort. Simon, what do you think that would change? Do you think if you had a poll of people now and you said chunk of money, would the same answer be property 20 years hence?
I think if you had a poll of people now, that it would potentially depend slightly on their age. I think older, it would still skew towards property being a good investment. I think younger, the younger people have been exposed to a number of years of stories of very big, well-known companies, largely US ones, seeing their share price rise by a lot, and there is a larger interest in stock market investing from the Gen Z generation than I think there was from that same generation when I was their age. And when I was their age, it was all people talking about how much money they were making in the property market.
It's funny you say that, because I was on a flight the other day, an EasyJet flight actually, and the flight assistant, 24-year-old young lady, was talking with her colleague, and she said, yeah, me and my brother, we're going to buy this really run-down place and we're going to do it up together. That's our plan, because we can't see any other way of getting on the property ladder. So that wasn't about investing. That was about maybe seeing a way of the only way she could think to get on the property ladder. But it did surprise me that sort of anyone of 24 would be thinking about, basically doing up a property, potentially to sell. I don't know. Rob, I'll ask you the same question. If you had a chunk of money now and you didn't have that history in property, what do you reckon? Do you still think you'd go for property?
So my situation is now very different from what it was, just in terms of, right, I've got a family now, I've got things going on. I'm less inclined to make the effort. But I completely agree with you that there are more there are more things to invest in now. Like, we didn't have crypto back then, and the stock market is so much more appealing. And even if property does appear appealing, if you start looking into it, you do quite quickly realise it's actually harder work than you might have thought.
I think a lot of it depends, and I'd be really interested to get your thoughts on this. I think a lot of it depends on whether you can add value to that property and whether you can do that work or some of that work yourself. So I think if you are 24 years old and your brother happens to be
In the
a
trade.
plumber
Yeah.
or an electrician or in the trade or just handy, then or you are yourself, then that is a totally different ball game because the cost of doing work is really expensive at the moment. You know, me and my wife basically built our own house, right? We rebuilt our house with a builder who is absolutely brilliant and we could completely trust. The cost of doing that work was very expensive, and the cost of doing that work has gone up even more since we did it. Now he said to me, "You should do this again. You make some
Mm.
money," and I'm like, no. I was like,
Yeah.
if I was you, then I would do it because you're a builder and you can do the work yourself. But me, I can't do any of that stuff. So for me, it's like the cost of actually doing the work and adding the value is so high. But if you are someone who can do some of that work yourself, then I think it does still make sense.
But you don't think this is investing anyway. So why are we even talking about doing up
Yeah,
property to sell?
I mean, if you're doing it to live in, fine, and
Or to
obviously,
rent it.
if you're upgrading your home, there's tax advantages to doing that. But as a business, it is a business as much as an investment, and you are no one ever factors in their own time.
Mm.
If you started costing up your own time versus what you're making in your day job, I think it'd be very hard to make it profitable if you're also paying someone else to do all the work.
So I'm going to ask you, Rob, the same question I asked Simon at the start. Is buy to let dead? And within that, the context of the environment is different from,
Mm.
it is. Money is more expensive. Interest rates are higher. Risks are more costly. It has changed. So in this higher interest rate world, in the context of, policy changes, the
Mm.
Renters' Right Act, is buy to let dead?
I think for some people it is. I think there are groups of people for whom it would have been a viable option, and now it's not.
For example, which groups
So,
of people are we talking
so
about?
let's take your accidental landlord. So, it's very common that you'd have a home, then maybe you'd move in with a partner, and then you'd keep hold of your old one. So you've got like one property in your old in like, owned as an individual, right? See your hand going up.
Or you move country.
Yeah. But previously, maybe that was like a reasonable thing to do. The value goes up over time. The rent comes in, great. But now the tax consequences of that can be so limiting, depending on your other sources of income, that it just doesn't make sense anymore. And then you've also got so much more. There is more compliance. There is more that you can get wrong, and that can be very costly. And so you've got accidental landlords, and just like your real kind of like your classic amateur landlord who just like owns one or two casually. Like it's just so hard to make that work financially. You're
Mhm.
taking on more risk for less return. It just doesn't seem worth it. There are still big groups of people for whom it does absolutely work, but I just think that kind of like small scale default option, you it just doesn't add up.
Who does it work for?
I think it works if you are going into it for the long term,
Mhm.
because so much of the advantage of property is in just time passing and inflation. Basically, inflation lifts the value of your property as it lifts everything. But if you've got a mortgage, then your debt stays the same. So you end up capturing 100% of the gain of property prices, but you might have only put in a third of the money. So obviously, the maths is pretty compelling. So if you're doing it for the long term, great. If you are doing it at some kind of scale, so I sort of say rule of thumb, like working up to having at least 3 or 4, not necessarily to start with, but getting there because it just makes the effort worth it. Like you have to go through so much learning and so much stuff to do it just
Mm.
for one property. I'd question whether it's worth it. And then the final thing I'd say is you really want to be doing it as not a cash flow play. So you're going again, it's a long-term thing because the tax situation is much better inside a company than outside a company. But if you've got money inside a company, and that's where your rent's coming in, if you then want to take it to spend yourself, you pay a hefty dividend tax, and so it doesn't really work anymore.
Mhm.
Whereas if you want to leave it in the company to roll up for future purchases or to draw down on later in life or as part of something to pass on to future generations, then it's great. But if you're wanting to take the cash now, then it doesn't. So it very much depends on your motivations. If those are your motivations and that's your timescale and you're comfortable with taking on the debt, which I do think is a big part of it, then it can work brilliantly.
That was something, my naivety. So my naivety when I was reading the book was, I don't know, I had it in my head, if you have like a 1 or 2 properties, oh, that's your income. But actually some of the examples you gave, you're like, yeah, once you take away tax, once you take away any repairs,
Hmm.
perhaps you're hiring a letting agent. And I put my hand up there. So I am moving country. I'm renting out my home that I've only bought and lived in for a year and a half. Um, which is significant because I've rented all the time before that, and we'll get onto that in a
Mm.
minute as to the fact that I've never had that desire to buy a property, finally buy a property, and then move country. And so I'm renting it out, and yet what I'm getting is not even half covering the mortgage.
Hmm.
Were it not for the fact that, I'm having a company pay for rent, my other half's company paying for rent where I'm going, we would have to sell that
Yeah.
property. There's no way I could make that work. So I don't know why I was surprised reading your book going, you can only make £6,000 a year. That's not what I was thinking. So when you talk about these fat cat landlords and, that kind of, and I do think we've got this narrative which is quite anti-landlord, that didn't add up to me. Because we do have this, don't we, Simon? That kind of view of landlords. I sense that it's changed. I don't know if you guys feel the same.
We do, and I think people project their personal experiences onto it. Anybody who's ever rented more than 1 or 2 properties in their life or knows people who will know the scenario where you agree to let you agree to rent the property and say, could you fix that and that, and then you move in and it hasn't been fixed and then it never gets fixed, and
Mhm.
or something goes wrong and then the landlord doesn't send, or the agent doesn't send around someone to fix it. There are things that go wrong. It's not the seamless process that people would expect, and then they project that onto everyone. But there are good landlords out there and there are bad landlords out there, and good landlords will know that the best way of making money is to avoid having times when your property is empty and having void periods, because then you're paying your mortgage and you're not getting any money in.
Mm.
And the best way to avoid that is to be a good landlord and to have happy tenants, and happy tenants are good tenants, and it ends up being a relationship that works for everybody.
I imagine that's something you strongly agree with there, Rob.
Yeah, I mean, you're not going to get rich off the rent alone. Like you've said yourself, like if to
Mm.
add up to an income, you need to have a heck of a lot of properties,
Mhm.
and then, but so then really because it's about the asset over time. You want to maintain your asset even if you don't care about the people living in it, which you should. But also you just want to. What you really want is an easy life, and the way to have an easy life is to not have frequent turnover. You want people to be sticking around. It's why part of the narrative around like no fault evictions is a bit strange. You get the feeling that people are chucking out perfectly good paying customers all the
Yeah.
time. It's like, I'm sure some will, but it's like it's not being that greedy is not the way to actually make money.
Is it not a good thing that some of the policy changes around it, you spoke about no fault
Hmm.
evictions, there are nefarious actors. We know that. There are bad landlords, there are good landlords. Is it not better that some of these policy moves are moving to professionalize the industry a bit more? Is that because isn't it something like over half of all rentals are 1 or 2 properties?
Something
Is
like
that some
that. It's along those lines, yeah.
and isn't it better that we do become more professional
I
and
think so.
become more, everyone says Germany. Is Germany that? I've never rented in Germany, but I do hear it's supposed to be really good for rent.
Yeah, I don't know about Germany, but I think it is a good thing. I mean, you could argue with some of the decisions that have been made where certain lines have been drawn or whatever, but I think in general it is a good thing. I mean, I've got to declare an interest. I am a tenant as well, so I've got my portfolio, but then I choose for flexibility to rent my own home. So I know what the experience is like, and it's terrible. And so like improving it it makes sense, and I do think people hear professionalising and kind of go straight to, oh, BlackRock are going to own everything and all the rest of it. And I get why people like the idea of being able to have a property as an investment. But you you rightly said that there's a small group of bad landlords. They're like criminal landlords, and the laws are there and they should be prosecuted. But there's also a bigger group of just disengaged landlords, people who aren't, it's not a big part of their life. They're not taking it particularly seriously. There are things that they're not doing or that they're doing wrong because they have no idea how they should be doing them. There's no exam to pass to become a landlord in England. There is in Wales, but not in England. And so people just, that means that when you're on the other side of that as a tenant, it's immensely frustrating and it can really affect your life because it's your home.
Yeah.
So I don't think it's a bad thing that it is professionalized, but obviously the path towards that is going to be very emotive. Landlords have got this view where it's my property and I should be able to do what I want with it. And so, yeah, it's always going to be fraught. And I wouldn't make all the same decisions, but I think it's going in the right direction.
I have to ask, are you the best/worst tenant ever? Because if anyone does anything wrong, you can say, well, according to clause, whatever, I can tell you. But isn't that interesting? Do people say to you, wow, why are you a tenant?
Yeah, no one gets it.
Like, I get it. No, I get it. I am, like I keep saying, I'm a dyed-in-the-wool renter. I really enjoy the freedom, the flexibility. And this argument that I'm just throwing money away to pay off someone else's mortgage, well, great. Well, good for them. But I'm actually getting something in return, you know, and that is probably living in a better area than I could. I've moved around the country as a journalist. I can just walk away, and I've lived and worked abroad. So for me, it's made sense. And actually, when I moved into a property that I'd bought, my world didn't set on fire. I didn't feel like I've made it at all.
I know, and I think that's why it's important to have a rental sector that actually works for tenants, because it shouldn't be some second-class citizenship. It should be a valid option, because lots of people, it's not going to be right for any given stage of their lives. But I'm with you. Like everyone said it would change when I had kids, but now I've got 2 kids, and I still love the flexibility of renting. And it's just a choice, and it's not even always a worse financial decision. People, as long as you invest in something, it doesn't have to be the home you live in. The home you live in is very tax advantaged, but it doesn't have to be that. It's just, again, one of those biases people have.
Because people have in their own homes, if you own your own home, you have a lot of capital tied up in your own home that you could otherwise be doing something else with. For example, investing in property yourself. Because that takes a lot of capital, doesn't it? The barrier to entry is pretty high nowadays.
Yeah, this is it. The thing about your home that I feel like people sometimes miss is that, like, its utility to you is like capped at the amount of rent you'd otherwise be paying. So if your house goes up from 250,000 to $1 million, well, great, but it doesn't actually mean anything for you at all. And if you wanted to continue to move to a similar house in a similar area, that would have gone up in value by the same amount. So it's of no use unless you downsize, which of course you can do, but people, again, are weirdly reluctant to do. And so, yes, I mean, obviously a lot of people want stability. That's great. Being able to own your own home is a good thing. It helps you. It sort of forces a savings plan upon you. There are loads of benefits to it, but it's not the ultimate answer to everything.
This is interesting because you mentioned this in your 7 myths about money, that kind of home rental bias that we have. And I want to talk about behavioural aspects of property and bias, because I imagine with property, it is probably one of the emotive, maybe crypto, but emotive investments that you can make. How do you stay cool and calm and not put that stained glass window in the front door that you know everyone will love, but actually it's hideous, you know, that sort of thing?
Yeah, you have to kind of have no soul. It's just it has to
whitewash
be
everything.
It has to be an investment, and yes, someone's home as well. But I think this is why, again, like accidental landlords, if it was previously your home, then that makes it very emotionally difficult if someone comes in and doesn't look after it. And like, we've got a newspaper column, people always write in and say the tenants aren't mowing the lawn enough. What should I do about it? It's like, well, not much, and
that's
it's
brilliant.
probably not the biggest problem.
In my property, because I'd only been there a year and a half, I actually met the tenant by accident. He came in and he said, "Oh, do you mind if I change the light?" I said, "You crack on. I've only been here a year. I have no emotional attachment. God knows what my house is going to end up with, but I don't have any view that I'd go back there, so I don't have that." But I can imagine if, let's say, my mum rented out her property, which she's lived in for 40 years, things would be different.
Yeah, exactly. And it's the classic mistake everyone makes when they're refurbishing a property is they impose their own tastes on it. They overspend on it because it's like, well, it's what I would want. And it's like, that's not what you really need. And so again, it is emotive, but you sort of need to split out that the two and try and take the emotion out of it.
When you're buying a property to invest in, what do you look for? What is it that makes you think, right, this is the property to buy, to invest in? And what is it that makes you think this is not the property to buy, to invest in?
Really good question. So a surprisingly big factor for me is ease. So I would not want to invest in like a really beautiful Victorian terraced house because it's beautiful, but it's also got old electrics and the boiler could implode and the roof will need retiling and all this stuff. Because again, for me, it's just about like having this going on in the background for a long time. I just want it to be as easy as possible. So that leads me towards things that are new-ish. I am not against flats. A lot of people are very against flats, but I own both, and I think flats can be less work if if someone else is managing them well, so you don't have to. So a big part of it is just convenience. Another part of it, of course, is the numbers. It has to be making a rental profit, and it has to be, I believe, have an above average chance for capital growth over time, which at the moment is very much about where in the country it is, because basically anything in the north everything in the north is going to grow, anything in the south isn't. So you've got it's those factors, and then again for convenience, I want something that is rents in probably like the top 20% in the area for something of its size, because then you tend to be attracting a tenant pool which is more financially secure. If you get a property like that, you price it well, you can take your pick of who you want. You get someone who's going to be there for the long term, nice and easy. So that's boiling a lot of spreadsheets and a lot of stuff down. But that's the gist of it.
Will you buy new build properties or only existing properties?
Yeah, I'll do both.
And with the new builds, what is it that you watch out there? Presumably the price.
Yeah, so I've got a company that was some of what we acquire is new builds, and so we do this a lot, and so we sort of see all the things to avoid. There are lots of things to avoid with new builds. We filter out an enormous amount. The whole thing about new build premium, I'm not sure how much I buy into it, but what I think is definitely true is it's very easy to overpay for new builds because it's hard to have direct comparisons and you've only really got the agent or the developer's word for it. And in a hot market, that's when you end up really overpaying.
Do you only buy kind of ready to go ones then?
These days,
As it
yeah,
were.
not always. So I've never done like the full on back to brick thing, but I have had some in the past where I've done a light refurb. But
Do you do it yourself or
no,
No.
absolutely not. But at the sort of where I am now, I just don't have the headspace for that.
Mm. Would you ever consider going back to that or just
No, because I really believe that with property, you make your money by buying at the right time, you're buying the right thing and then holding on to it. So you could make a bit more money at the start if you also refurbished it. But how much extra would you make? What percentage difference would that make to your total return over 30 years compared to the hassle I'd have to go through to do it?
Are you worried about the tax position changing? I spoke about policy changing sort of against landlords. It must be something in the back of your head that you think any government could just keep adding. It feels like they do.
They could. The thing is, like, because personal ownership is already like now really disadvantaged, and it got a bit worse in the last budget. It went up by another 2%.
Exactly.
Limited companies, drastically changing the game for limited companies is much harder for lots and lots of reasons. There would need to be a very good reason for them to do it. And
How do you mean changing the game for limited companies, for
so
example?
if you wanted to just increase the amount of tax that companies paid on their property income,
Yep.
just as a matter of how the tax system works, it's much harder to do it. And you then get lots of special interests coming in and lobbying against it. So you'd need to somehow carve them out and say, actually, it's only for the guy down the street who says he's a company, but he's only got 2 properties or whatever. So it's not impossible. They could do it. But I'd say what they've done over the last 10 years has kind of worked. Like if you look at what was intended to happen, but there was the property boom. They didn't want another property boom. They didn't want like people making too much easy money for property and having this divide. Like if you've tried, there's damped down interest in property and all the rest of it. If you go any further, you start to get into unintended consequences around a lack of rental supply. So it's not. It's possible that someone with just like a real ideological zeal will come in and do it despite all the problems that it would create, but it's pretty low down the list.
Would you say to only invest in property through a limited company?
Wouldn't say only because everyone's situation is different, but
Clearly, yeah.
it's very it's so much more advantageous that I think there's a strong argument for doing it. 75% of new acquisitions are within limited companies, and probably some percentage of the rest should be. So it's like it's become dominant for a reason.
How hands-on do you think people should be? And I imagine it just depends on the type of person you are. And when I say that, so I've got a letting agent, which takes a good chunk of your money every month, and you do go, what are you actually doing for that? But is it better not to have that, or what would your advice be there?
Um, in terms of how hands-on, once you've bought it, we just talk about once you've bought the property, you've got a tenant in there.
Yep.
If you've bought the right property there and you've got put the right tenant in there, you've got those two things right, then most of the time nothing will be happening. So I think really whether you want to get a letting agent or not is about whether you're effectively buying insurance against having to do something, because when you do have to do something, it'll inevitably be while you're off skiing or something will happen. And then if someone's heating stopped working, they're not going to wait for you to come back from your holiday in a week's time. It needs to be sorted out now. So that's where you might want to get an agent. But then again, the choice of agent becomes really important, and there are good ones, bad ones, expensive ones, and
Can you
better
get one
ones.
just to find the tenant, and then you deal with the rest later?
Yeah, you can.
But then the question I would ask you is, when the boiler goes, and it will go when it's cold, it will never go in the middle of summer. It will only go on the coldest week of the year. How quickly can you get a plumber around? Do you know a plumber that you can trust, and how quickly can you get them around to fix, or a boiler engineer to fix the boiler? How if the washing machine breaks, can you get them a washing machine the next day? It's things like that that trip people up. I remember in the first flat that me and my wife rented together, the pipe started dripping by the toilet, and it was dripping, and we contacted the landlords. We'd rented direct off them. They were classic DIY landlords kind of thing. They said, we'll come around tomorrow and do it. It was a Friday. They would come around on the Saturday. Like, okay, well, what do we do about the fact that it's dripping? And they were like, well, could you put a pan underneath it? And I said, we have put a pan underneath it. We are not complete idiots. But the pan is filling up. We are having to empty.
It happens.
The pipe is low to the floor. You can only fit a certain size pan underneath it. The pan is filling up approximately every 52 minutes. I can't remember the exact number, but it was around about that, slightly less than an hour. They're like, we could empty it. And I was like, yeah, we have been doing that as well.
Didn't.
I was like, but this is not really viable, overnight. How do we turn the water off? Not quite sure. We'd need to come around and have a look. Okay, could you come around? Yeah, we could come around tomorrow. It's like, well, what are we going to do tonight? So we basically ended up having to set an alarm to wake up
every 51 minutes.
So they emptied the pan overnight, and then they came round to fix the pipe. And it took these two guys, bless them, it took them the entire day. They spent their entire Saturday fixing the pipe, and I was just like, would have been much easier if you'd have known how to turn the water off, or just told us how to turn the water off. I mean, maybe we should have known how to turn the water off. But in your own house, it's your responsibility to know how to turn the water off. When you're a tenant, it isn't your responsibility. But would have been a lot easier if they could have just sent a plumber around to fix the pipe. And actually, to go back to a point that you made earlier, Rob, probably would have saved them quite a lot of money if they'd have factored in the cost of their time.
That's exactly right. But this goes back to what you said. There are good landlords, there are bad landlords, there are good letting agents, there are bad ones. The worst experiences I've had have been with letting agents. They're the ones that don't care. In my experience, I've had the greatest some of the most amazing, who you say, is there a problem? Bam, it's sorted out. Whereas I've had letting agents going, can you take a photo? Can you upload it to our portal? And we'll get, I'm like, oh, I don't know how to do it. Just can I not call someone or email you? No, you have to go through the portal. And
This goes back to your point of the difficulty of it when reading the book. The difficulty of
yeah,
it, like your investment fund doesn't do that to you.
yeah,
Your
exactly.
global tracker.
They don't
You
say to
never
me,
have to do
Georgie,
that to your
fix
global
my
tracker.
boiler. No, it doesn't do that. It doesn't do that, Rob.
No, but this is the thing. Like people, this is why to get into property, you have to kind of like it in the first place to put up with some of it, and you need to go in knowing what it's really like and having a plan to make that fit into your life. I know people, weird as they are, who actually like dropping everything to go around and fix things. It gives them a sense of accomplishment
life.
or something. If you're not one of those people, then you should get a letting agent, but a good one, because
Yeah.
you get I don't know, the average landlord is probably better than the average letting agent, but then there's a huge dispersal of types of landlord out there.
So, what would your advice be for someone choosing a letting agent? How do they find a good one?
It's the least helpful advice in the world, which is that there is a recommendation is best. But short of that, it's probably not popular. I've got a bias away from the chains because I find that they tend to be more expensive. They tend to have less landlord-friendly terms and quite high staff turnover, and often people who don't care aren't that experienced. Whereas if you can find a smaller firm, especially one where it's like maybe someone who owned some property locally, they started a firm to manage their own stuff and started taking on other people's, it's a rule of thumb. It's not obviously not always true, but it tends to be the case that then you get the fees are more reasonable, the staff stick around longer and kind of are a bit more invested in it. So I'd start there, but then really be looking through reviews if you can't get a recommendation, and really as a landlord putting a huge amount of thought into it, because this is who's going to be looking after your asset that you are going to remain legally responsible for. And so people I think go into this way too lightly, but I think as a landlord I'd put a lot of thought into that decision.
One thing I'm really glad that we did is we got a few options.
Yeah.
We did eventually go with the company that we bought the house from, the estate agents that we bought the house from, and they were local, exactly what you said, good reviews. But they quoted 9%, and we got one of the big boys, as it were, to come round and give us a quote 17%.
Yeah. It's wild.
But imagine if we just invited the 17%, we would have had no idea.
And do you need to also watch out for the thing that the mistake that people make when they're selling their home, which is they go with the agent who tells them they'll get the highest price for it?
Oh,
you need to watch out for. Don't just go with the agent who says they'll get you the most rent.
No, definitely not. It's like, we've got tenants waiting. We've got all these people queuing out the door, and then by the time you've instructed them, it's too late. And 2 weeks later, no interest at all. Drop the price.
You said go in with your eyes open, know what you're likely to get. But look, the reality is, whatever investment we go into, there can be things that happen along the way, internal or external factors. There must have been, your experience now, but there must have been times along your journey where you made up a few boo-boos. Like, share the bad experience with us.
Let's just say there are properties I have owned and the properties I own now that I would not buy again, and it tends to be the cheaper ones, because that's why I've learned my lesson. And I was sort of saying earlier, go for stuff which is a bit more premium, because the worst thing I've done is buy in a bad area, because you can't change that. There's not a lot you can do to change the area that you bought your property in, and so that just means you get so many issues. You might not know this, but if the police kick down your door, you have to pay for it to be replaced, even if they kicked it down because they were looking for the wrong house. And that's happened to me twice.
Twice?
Yeah.
Oh, goodness me.
Yeah.
So if you did want to, because you do need rentals in those areas, any advice, or you just wouldn't?
I just wouldn't.
You just wouldn't?
I mean, it's a very specialist area anyway. I know people who do it. They are very hands-on.
Yeah.
And they're almost like part of the community, and they take it very seriously, and they do well out of it, but they really work for it. If you are not doing that, do not go and buy the highest yielding thing in Middlesbrough that you can find. No offense to Middlesbrough, but if you're 300 miles away and you go, oh, the numbers look great and all the rest of it, no, it does not end well.
They might look great for a reason.
Yeah.
Is there anywhere in the country that you are looking at this year that you think, oh, that looks nice?
Yeah, well, it's so easy at the moment because, like I said, it's like anywhere in the north is just performing so much better than anywhere in the south. So if you just get the right half of the country, you've already pretty much won.
Is that because it went from a sort of lower base, as it were? There's more room for it to grow.
Yeah, pretty much. So sort of London it came back stronger. And the rest of the country is still catching up. The ratio of prices in south to the north is way off the historical norm, and so.
Would you buy in London?
There'll be a time when it works again. It's better than it was a few years ago, but it's still not back there yet. But like we do, you can't be too clever. Like we did a lot in Manchester about 5 years ago because when Manchester was really taking off. Now we're doing like sort of like Nottingham, Derby, Leeds. All this kind. It's like you don't have to go and find like the ultimate property hotspot. You can, and it's great if you do, but you don't have to. I think if you just pick the right region, then you're all good. But then again, if you're not local to that place, you need to have the right people locally to look after it for you. You need to have the knowledge to make the right decision in the first place. If you don't know the area, it's easier to stray onto those less desirable streets.
And you say that you're a long-term investor. And your idea is to hold those properties for a long period of time and make the money from them.
Mm-hmm.
How do you decide when to sell?
Great question. So this is where property booms are great because when the market's hot and it's easy to sell, that is the time to offload the things that you wish you hadn't bought, or all the things that have done their job for you, and now that you think that it's had its growth or whatever. That's so at the moment, like the market is so flat that I do have properties that I'd rather not own, but I'm just biding my time because when the market comes back, that's the time to pare down a bit. Then obviously the crash will happen at some point. It will come down the other side, and that's when you can go and buy some more things at a cheaper price.
It'll annoy me if I don't ask you, and it might be a bit rude, but I'm going to ask you anyway. How many properties do you have?
I'll never say.
Oh! Is it more than 10?
Not going to say.
Oh, you cheeky.
Whatever number, people go, oh, that's not many. He's got a podcast. It should be more. Or, oh, he's a greedy landlord. He's got too many. You absolutely can't win.
I want to ask you about the Renters' Rights Act, because the reason that I want to ask you is because I have never known so much engagement, particularly from young people, around an act of Parliament. Do you know what I mean? I was buying a coffee the other day, and the young girl behind the counter was like, "Oh, things are changing, aren't they? They're changing," and she knew everything. And I don't have a lot of followers on social media, but I have one video that I did about this Renters' Rights Act, which has got over 600,000 views, which when you've only got about 5 followers, that's a lot. There is something about it. And what's interesting is the comments, and it really is. People are vicious on there from both sides. And the threads that are coming through is a lot of landlords are selling up.
Mm-hmm.
A lot of people have no sympathy for landlords. A lot of young people saying, well, about time we need to buy properties. Are we seeing, firstly, a massive exodus of landlords that we're talking about? And will this, 1, be better for renters generally, and 2, if landlords are selling up, make it easier for first-time buyers and young people to get on the property ladder? These are big questions, I appreciate. But do you see that could be the result of this?
I think it is causing a clear out of landlords who've been in it for a long time, but I don't think it's the only factor. I think it's a lot. It's like you've had all the tax changes of the last decade. You've had all the new legal requirements. Interest rates have gone up. You've had your capital growth, and now you haven't seen any for a while. There's lots of reasons. Lots of people who sort of came of age in the last big property boom might now be going, now's my time to get out. So I don't think it's the only factor, but it's part of it. Will that make it easier for people to buy? I don't know if it's going to be enough of an effect to really. I mean,
or BlackRock will come in and just buy them all up.
Exactly, yeah. The biggest barrier is having a deposit. So if you haven't got a deposit, then it doesn't really help you. But I do think it will. I think I like for the landlords who will not like me saying this, there's lots that I don't agree with. And I wouldn't have done it quite that way, but I do think on the whole it's a good thing. And I think the best thing about it is doing away with fixed term tenancies. I think having this kind of annual thing
Mm-hmm.
where it's a chance for the you've just got this insecurity every 12 months.
Yep.
Don't know what's going to happen. I think that's really damaging. And I think having that taken away, no one's focusing on that bit, but I think that that's the bit that actually is the most positive.
Simon?
And obviously, you spoke there about the difficulty of raising a deposit for first-time buyers. But for somebody who wants to invest in property, that is also
Oh yeah.
a major difficulty. And you are traditionally asked for a bigger deposit to
Yes.
invest in property. What would you say is the kind of minimum amount someone needs to invest into a property? What barrier hurdle do they need to clear?
So again, rule of thumb, I'd say as a bare minimum, you need about £50,000. And that's because you'll need to put down a 25% deposit, but then you've also got to pay your stamp duty and you've got other costs. So my rule of thumb is you multiply the amount of money you've got by 3 to figure out the property you can afford. So 50,000 would get you a property worth 150,000, assuming you don't have to spend any more money on works or anything. And obviously in London, doesn't get you far, but there are parts of the country where that gets you a perfectly nice house. That's the minimum, but then, as I said earlier, you kind of want to have this. You need to get to some degree of scale, so you want to push on to sort of maybe 3 or 4. So I'd say if that's the only 50,000 that you're ever going to have, then still maybe it's not worth it. But if you're in a position where that's what you've got now, but you know that you're saving every month, you'll put the rental income towards it as well, and in 2-3 years you'll be ready to buy again, then great.
And the yield, what sort of yield would people be looking for to make that investment on a 150,000 property worthwhile? Or would you not worry too much about the yield?
I don't worry about it too much because you need to be making a rental profit. So if you really want to be making a couple of £100 a month, because if you're not, then you're too close to making a loss, which is not where you want to be, because that's what means you get to have to sell at a time that's not of your choosing, which is not what you want. So, but then I think if you overfixate on the yield, then you get pushed towards things that are very high yield but higher hassle, or high yield but lower capital growth. So that's how I tend to think about it, because you're not going to get rich off the rental income anyway.
And always with an interest-only mortgage, not with a repayment mortgage.
Yeah. And my thing about interest-only mortgages is you can still choose to pay off chunks of capital at certain points, and you can make overpayments. And so the great thing about interest-only is it means you're not committed to someone else's schedule. So it actually is. People think it's more risky, but it's actually safer because it means that you've got more monthly cash flow, and you can still decide if you want to overpay.
Is it best to go through a broker?
Yeah, I'd say so.
Yeah.
There are more products available now than ever before. There's hundreds, probably thousands of them, and so the chances of picking the right one, I'd say yourself, are slim. Plus, they're there to sort of smooth things out whenever inevitably something weird happens. It's just nice to have someone on your side.
So, as a sort of wrap up to this, if someone has been convinced, first to get the book, and then you'll know whether you're really convinced you want to do it because you realise how much hard work is involved. But if they are, what sort of, is there a blueprint to follow? What do you think people should really be, the questions they should be asking themselves before they really commit?
I think the most important question is to ask yourself why you're doing it. Like, where do you want to end up? You don't want to be going into property on like property as a default, which is what I did and what so many of us did. But property as a default doesn't really work, and it's a recipe for either buying the wrong thing or realizing that actually it wasn't worth it in the first place. And then once you're in, it's expensive to get out. So just know why you're doing it and have a sort of a plan, like project out. Okay, well, if I buy this, then a couple of years later, then I'll be able to buy another one. Here's where I'll buy them and why. Here's how I'll manage them, and convince yourself that it's actually going to be worth it. Like, run some sensible numbers. You'll realize by doing that you need to be using a mortgage, because if you're looking at like unleveraged returns against the stock market, it's just not worth it. But do all that and like really think it through, because whenever we see people who've got it wrong or they're questioning like, is it really worth it and all the rest of it, it's normally because they didn't know what they didn't know what they wanted, and they didn't know how property was going to get them there.
Thank you, Rob. I do also want to talk about your latest book because you are something of a financial educator now, not just a property investor. But I do want to ask, before we kind of properly wrap up on this, is what's the one belief about money or investing that you wish people would just let go of?
Oof. It's a good question. I think the most harmful belief is that investing is really complicated, and it can be, but I don't think it has to be. I think, and when people think about their personal finances as a whole, they almost put too much emphasis on investing. Like, first of all, like if you're going to spend everything that comes in, however much you earn, then you need to fix that first. Otherwise, you're not going to get anywhere. And then after that, the most impactful thing you can do is find ways of earning more, whether that's like getting a pay rise or getting a side business or whatever. That's going to make a far bigger difference than worrying about like exactly like, oh, well, the fees on this tracker fund are like 0.12 versus 0.14. Is like it makes such a small difference in the scheme of things. So I think investing can come across as complicated because there's a financial industry out there to make it seem that way. But it's these days it's not hard to teach yourself things. You can learn everything you need to know for free. And so just learn enough to figure out like a basic solution and then just do it, put it on autopilot and do not think about it again.
Super, Rob. Thank you so much. Right now it's £1,000 move. If you had unexpected £1,000, where would you put it?
Do I have to invest it?
You can do whatever you want with it.
Oh.
It's an investing show, but property sector. Yeah, but what would you tell me?
I'd spend it.
Yes. On what?
Something fun like a holiday. It's like I've got like some people are like dyed in the wool savers, and I'm like a natural saver. So my inclination would be, oh, I'll top up my ISA, lovely. But I think it's actually helpful to spend and have experiences and do things, and not just have the biggest bank account possible.
I'm guessing at least 20 properties, Rob. For an answer like that, you must be doing well. Simon says.
I think from what Rob said there, it's obvious that you can still make money on property, but it is a long-term investment. Investing is a long-term game, full stop.
Yeah.
Whatever you're investing in, it should be a long-term game. But investing in property is a very long-term game. But it's not easy money. The easy money has gone, and it's not coming back for probably quite some time. So if you can't be bothered to do what Rob said, to work out the numbers, to project out what the future might look like, how you might build your investments over time, and to sit down and spend some time thinking about it. If you can't be bothered to go buy Rob's book and then read it.
That was the easy part, buying it. That was really easy. Then it was harder reading it, but to actually put that in practice.
But if you're not willing to just put that bit of work in, right, don't invest in property.
Yeah.
It's not for you. Just open an investment account and buy a tracker fund. That's really easy. You don't need to buy a book or do any of those things to do it.
This is not financial
or project
advice.
out your numbers. But if you do want to invest in property, then do that work, and it could pay off. Because I have heard so many stories of people who've done well from investing in property, but I've heard so many stories from people who've lost money or are just still losing a bit of money every single month and holding on to it.
The one question I'd ask is about just on the back of that, on the back of what Simon said, you will always hear the horror stories. How do you block out the horror stories?
To start with, you don't block them out because there's probably that tells you a really good map of what not to do.
Yeah.
But then after that, then I think once property's scariest before you've done it because it's all very theoretical. But then I think once you've established that you should be doing it, and then you do it, and you realise that most of the time just nothing's happening and it's actually a bit boring, then that's you don't have to worry. Most of the things that people get wrong they were very clearly bad ideas. So you just need to listen to those stories and go, yeah, I'm going to avoid that.
Rob, thank you so much. Simon, thank you. And thank you for joining us. If you want to get in touch with us, you can find us on social or email us. Remember to hit subscribe so you don't miss an episode. And make sure to tell your friends who don't know their CDOs from their IPOs about us as well. If you enjoy Investing Unlocked, especially our retirement episode, then I think you'll enjoy this from our sponsor Pension B, the Pension Confident podcast, hosted by Philippa Lamb alongside a panel of financial experts. It's aimed at those who want to understand pensions and personal finance in a bit more depth, but without the jargon. They cover topics like ISAs, mortgages, the bank of mum and dad, as well as how to become a pension millionaire and the cost of divorce. There are new episodes every month, plus bonus content in between. You can listen on all major podcast platforms, in the Pension Bee app, or watch on YouTube. Just remember, anything discussed isn't financial advice, and when investing, your capital is at risk. Search the Pension Confident podcast wherever you listen. Before you go, just a quick reminder that everything you've heard on this podcast is for information and education only. It's not personal financial advice, investing involves risk, and if you're unsure, it's best to speak to a regulated financial advisor.